The war on cash has begun and we better get prepared. The Federal Reserve has launched the digital dollar and there's no escaping this. We have been talking about how cash is slowly going to get phased out, and guess what? This timetable is getting accelerated. We are going to live in a world where there will be terms and conditions attached to your money, and monetary policy will be rolled out like never before. Now, the Fed is teaming up with Wall Street to roll out a 12-week pilot program on the digital dollar. We are talking about big banks including Citigroup, HSBC, MasterCard, Wells Fargo, all joining the CBDC party. Now, the term for this project is called the Regulated Liability Network, which to me sounds very ominous and scary. But we have to understand how important this trial is, because if it succeeds, we are going to see a full rollout of the digital US dollar very soon. We're going to witness the rise of digital money and complete control over the monetary system and transaction privacy. We're going to enter a world where now where we spend and where we spend will be heavily influenced. So the Federal Reserve, through their New York Innovation Center, is launching its proof of concept project, and the goal is to explore the feasibility of a network of central bank wholesale digital money and commercial bank digital money operating on a shared multi-entity distributed ledger. And that's a mouthful, so let me translate it for you. Basically, they want to test if it's easy to launch the digital dollar and if the commercial banks can easily implement it. They're going to test how banks are going to function with the digital dollar by issuing tokens and settling transactions through simulated central bank reserves. Now, this is going to be a private test between the Fed and the banks, a simulation to see if transactions can be done using the digital dollar. So this isn't going retail yet and there won't be individuals directly involved, but it is still a big deal. The Federal Reserve is trying to test the technical feasibility and viability of the distributed ledger technology. They want to determine if the digital dollar is going to succeed in the real world. And the financial institutions involved also include SWIFT, the global financial messaging system. So the digital dollar is not going to be confined to just America, but eventual rollout to the world if this pilot test succeeds. And as you will quickly see, the digital dollar is a powerful attempt to tackle many problems the United States has. Now, the first obviously is to phase out cash. The second is to secure the US dollar. And the third is to control monetary policy like never before. The war on cash might have already begun. So let's go back to the basics and ask ourselves, why does the government hate cash? Why is the Federal Reserve pushing so hard for digital money? And we have to understand the advantages cash gives you and me are liabilities that the Federal Reserve and commercial banks have to tolerate. If they have a magic wand, right, they'll probably make all our physical dollars and cash disappear into thin air. And the first advantage cash gives us is the ability for private transactions to happen. When someone pays in cash, it is not only private, the taxman or the IRS isn't informed. And this means they won't be able to get the maximum tax revenue possible for that transaction. When we buy anything from a store, we get charged sales tax, and the money the merchant earns is tied to the taxable revenue of the business. So by getting rid of cash and everything being transacted on a digital dollar or Fed coin, they can find a way to introduce new transaction taxes or enforce existing ones. Maybe not immediately, but the possibility of implementing this is possible. This is why the IRS is already tracking transactions over $600 and warning Americans to report their annual transactions exceeding $600 per year. Now, this is a tax crackdown, and right now there's still a layer in between, which are the private companies like PayPal and Venmo. And according to the agency, they are aiming this at part-time workers and those with side hustles. So just imagine a world, guys, where there are only digital dollars, everything will be transparent, and this is going to be a logistical nightmare. How will they differentiate who are part-time workers and the average Joe trying to sell his old furniture, or even a college kid trying to sell off their old clothes? Now, cash also poses a potential threat to the banking system, and that is the second reason. It makes it too easy for people to withdraw large sums of money, which could trigger a financial collapse. So let's say your bank introduces a negative interest rate on your deposit, say a -1% rate. You'll probably go and withdraw your money tomorrow and just sit in cash. Now, magnify this by millions of people. Suddenly, you have a bank run on your hands, and this could literally threaten the banking system. Remember that we live in a world of fractional reserve banking, where the bank keeps only a tiny fraction of your cash and lends out the rest. And before 2020, the Federal Reserve required commercial banks to have a reserve requirement of 10%. At a reserve ratio of 10%, the bank just needs to keep $100 out of your 1 grand deposit. However, since March 15, 2020, the Fed has reduced the reserve requirements to 0% to encourage banks to lend to stimulate the economy. So if everyone withdraws the cash, the bank could literally collapse. But if you have replaced cash with a digital currency, you could prevent it. A negative interest rates could be coded into all your dollars, so there's literally no escape. The digital dollar takes away any incentive for bank run, so the financial system stays stable and the game continues. And let's have a moment of realization here, a moment of truth. There's no hiding from the digital dollar. It will come and everyone will have to use it. I know there are many opinions of how the CBDC could fail and this pilot test might crash and burn, but you only delay the inevitable. And I'll explain why. What the Fed is doing is to try and solve the technical issues. They're working out the kinks of how the distributed ledger is going to work. They aren't worried about the adoption issue because the majority of people are going to use it and embrace it. And the first strategy is to tie in government payouts and stimulus checks with the digital dollar. So let's say the economy crashes in 2023 and Jerome Powell does the Fed pivot and starts printing money. Instead of sending money through the mail and people getting physical stimulus checks the old-fashioned way, it could be through a CBDC. Basically, Americans could get a digital wallet issued by the Federal Reserve and the stimulus money will be issued via digital dollars deposited into the wallet. So let's be real and ask ourselves, who doesn't want free money, guys? I know I will. And this is one way to quickly drive adoption of the CBDC. And people will gladly start to use the digital dollar to spend their stimulus checks. Now, this idea has been floated during the 2020 lockdown stimulus when they were about to hand out the steamy checks. Never let a good crisis go to waste, right? In fact, Congress actually drafted the inclusion of a digital dollar into the initial bill to include a digital wallet and injecting the stimulus money into it as digital dollars. In fact, many experts floated the idea of how it could help families get the full amount instead of turning the checks into cash, which could cost up to 3% of the face value. And my prediction is simple. We could see a rollout of the digital dollar as soon as the next financial crisis hits. The Federal Reserve could start giving handouts through the digital dollar system. And the second method is even simpler, and that is getting people to pay taxes using the digital dollar. Now, we all pay our taxes, and we know there are multiple ways to do it, right? You can use cash, you can pay through a credit card, and you can also debit your personal bank account. But if taxpayers need to use the digital dollar to pay their taxes to the IRS, trust and believe that adoption is going to skyrocket. People will just accept it because it will be that much more convenient. For example, in China, we already have residents in 3 cities paying taxes using the digital yuan. So this is already a reality, guys. And whether we like it or not, there's no running away from CBDCs because adoption is truly not an issue. But let's zoom out and think about the digital dollar and understand why the Federal Reserve is going to launch it. It's not a matter of if, but a matter of when. Now, everyone knows by now that the world is slowly trying to de-dollarize. Yes, the majority of trade is done in dollars, but there are disturbing trends showing that countries are moving away from the US dollar. We can see central bank dollar reserves have been slowly dropping over the last 22 years. The dollar has gone from over 70% of global reserves to just 59%. And if you take a look at the global debt issuance, the majority is still in dollars, that's correct, but the amount of debt issued in dollars has gone from 80% to just slightly above 60%. And this is being driven by a lot of factors, right? Some are self-inflicted wounds such as the sanctions on Russia, while others include the rise of eastern countries like India and China. So the United States is fighting back to strengthen the dollar system, and they're going to do it by developing a CBDC. Jerome Powell himself has said time and time again that the US CBDC can help to maintain the dollar as the world reserve currency. So even if you don't believe the points we mentioned earlier, right, this alone is a powerful reason why the digital dollar is going to roll out sooner or later. Right now, the majority of transactions are done in dollars because there's already a network effect formed for almost 80 years. But the digital space is different, it's up for grabs. In fact, the United States is trailing behind China when it comes to CBDCs and they are playing catch up. The digital yuan pilot program was launched in 2020, while the US is only doing a pilot test today. And make no mistake, the end goal of the digital dollar is to create a network of users in the financial matrix, right? If the United States can convince the world to use the digital dollar for their transactions, this will entrench the dollar deeper as the dominant currency. And personally, I believe this reason alone is why the Federal Reserve will not abandon this project even if the pilot test fails. There could be a delay, right? But the digital dollar is coming for you and me. Now, if you're new to CBDCs, you might be wondering what is all the big fuss about. After all, if transactions are done through the blockchain, it should be more secure, cheaper, and much faster. But a big concern is privacy issues and how the Federal Reserve can track each transaction you make and create a profile on you. In fact, we have US representatives mentioning how a direct to consumer CBDC could be used as financial surveillance tool by the federal government. It is likely that transactions will be recorded on a private ledger that only the participating banks and the Federal Reserve can see, so it will be quite easy for them to see what you have been up to with your money. Now, that is a serious concern, but it is just the tip of the iceberg. What really keeps me up at night is how monetary policy will evolve. If you think the boom and bust cycles are bad enough, just wait until the digital dollar comes out. The Federal Reserve will have the money and the power to heavily influence how we spend our money. And here's an easy example. We know interest rates control how we handle our money, right? If rates are high, people tend to save more because they get a guaranteed return on their cash. And if rates are low, you tend to spend it or invest it because inflation is going to eat up your purchasing power anyway. So you either spend it now to enjoy or you invest in riskier assets like stocks. So if the Federal Reserve wants to stimulate the economy, it could essentially force the market to spend their money by programming negative interest rates on a digital dollar. And if the majority of people actively use CBDCs, this will be deadly effective. And if you have $100 today and rates are at a negative 1%, your balance could drop to $95 within 5 years. And if you don't have cash stashed away, you'll be heavily influenced to go out and spend. Plus, the Fed could always program further conditions into the use of the CBDC. Now, just imagine putting a time limit on your money or dictating where you can use it. It's basically programmable money, guys. For example, the Fed coin could expire if not spent within 60 days or 90 days, making it better for central planners to control versus cash. Now, maybe there's a limit to how much fuel you can buy this month, or maybe there could be some items that you can't buy with the digital dollar. The possibilities are endless. We even have the ECB planning an anonymous digital euro with some people calling it slave coins. And this is why many people are afraid of CBDCs because we do not know how the central planners are going to utilize them. Maybe the intention is good, but it could easily spiral out of control. This is why having some private wealth outside of the system is always a good idea. And you know me, I've been talking endlessly about gold and silver, but I know some of you all prefer Bitcoin. You believe it is the future of money. Now, I have a very bleak outlook for cryptocurrencies, whether it is stable coins or the big boys like Bitcoin. Now, don't get me wrong, I love the technology, I love the idea, and I appreciate its utility. But if cryptocurrencies try to challenge CBDCs or the digital dollar as a currency, I believe it will fail. It could survive as a store of value, but I don't believe the central planners will allow it to become mainstream money and compete head to head with the digital dollar. Now, the power the Federal Reserve will have with the digital dollar is the ability to freeze transactions or even reverse them because it is a private ledger. Now, if you accidentally transfer a Bitcoin to a friend, it is his or her decision if they want to return it to you. It's a peer-to-peer system without any central authority, and that takes away control from the Federal Reserve. In fact, it allows people to move money across borders without any restrictions. Why do you think China banned crypto? I suspect one of the reasons is that they are trying to prevent any capital flight out of the country. With a CBDC or digital dollar, if you want to move money out of the system, you need to justify it with a good reason. In fact, they can just program transaction limits into it. China, for example, has different tiers for their digital wallet. The higher tier wallets allow you to spend more, but you need to give up your privacy. For example, the lowest tier wallet requires just a phone number but locks you in at just 5,000 yuan a day of spending power. That's less than 700 US dollars. And if you want a higher limit, you need to provide your ID and banking information. And this is how powerful a CBDC can be and why cryptocurrencies can be seen as competition. And before you tell me the power of the blockchain and how Bitcoin is P2P, we need to realize that cryptos have points of weakness that CBDCs can block. All the central planners have to do is to write a line of code that prevents the digital dollar from being used at crypto exchanges, and it is done. If you can't convert your fiat currency into cryptos and vice versa, their utility could literally collapse. If you can't swap your coins for dollars, how are you going to use them in real world? You still need fiat currencies to buy stuff, settle your bills, and most importantly, pay your taxes. Bitcoin is still plugged into the financial system. And this is why I see a dark cloud hanging over the fate of cryptos as the digital dollar rolls out. With the FTX collapse and people all crying out for regulation, this is another excuse for the powers that be to replace cryptos with a centralized digital currency. And that's why building private wealth is best kept outside of the financial system. And there are very few options other than precious metals and physical cash. And what really concerns me is how monetary policy can be used to influence how I spend or save my money. They can impose new taxes, or the Fed can set rates instantly, and suddenly they can channel our money to wherever they want to. And that's a very scary thought. When the digital dollar arrives, we could be in for a brave new world where boom and bust cycles will get more severe, and government intervention in the markets will become intense. Want to drive up spending? Just program in higher interest rates, right? You want to stimulate the economy? Just set negative interest rates. You need more revenue? Just impose an automatic tax every time you use the digital dollar in certain categories. I need to repeat this again. There's no stopping the CBDC. There's no escape, but at least there's still time left to prepare. So let me know what you think. Will the Federal Reserve's experiment succeed? Are you prepared for the rise of the machines, the rise of CBDCs? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.